All right, I think we're just about ready. Let's see for, okay, there we go. We are live. Welcome, ladies and gentlemen. My name is Larry James. My company is Speak with Larry, no spaces. And when you're watching this video, you're probably watching a course that I'm creating or that I have created in line with the stock market. Because one of the things that I'm doing for the March, April, and May of 2021 is learning the stock market for myself so that I'm able to invest more money into it without feeling like I'm, going in blindly. And I suggest you do the same thing with anything that you're considering putting some money in, right? Spend a little time learning about it so that you get a full understanding of exactly, when you lose, why you lose, and when you win and why you win, right? You need to know those things. It's only smart. But I just finished my first course for March. I completed the entire process just as I would guide you through. It's available now everywhere. I'm priced that course at $20. Now, I think that's relatively inexpensive for 10 videos of content about the stock market, right? That's what you're going to be doing as well. You're going to be creating your series of videos. I recommend 10. It's probably about 10 is a good number because, then people will feel like they're getting their worth. You want people to get value from what it is that you're sharing, right? You want them to be able to move the needle in where they're trying to go or climb the hill and what they're trying to do. That way, you want to over deliver. You want to give them more than what they ask for, right? And 10 is a good number. Now, your price point is going to be a little lower than mine because your videos are probably going to only be, 1 to 3 minutes long, but there'll be 10 of them, okay? Each one, more intensive, which is also allowing you to be more comfortable doing what you're doing, being in front of the camera, having yourself positioned so that, you're not like rambling a lot. And that takes practice. I was that way in the beginning. Over time, you get better. That's how that system works, right? If you don't practice, you don't get better. Just like athletes, just like anybody else. You don't practice, you don't get better. That's how it works. That's the gatekeeper, in my opinion. The gatekeeper to your success is practice. You got to practice. You got to do what you say you can do. But this video, I'm going to be talking about economics, equity, and more. Now, again, this is the second month of my video series I'm creating that I'm going to create a course for. Now, this needs to be a little more strategic or more technical, not so much terms and definitions, right? Terms and definitions was the first segment. This is going to be more you getting to kind of the nuts and bolts of what it is that you're going to be learning, right? Or what it is that I'm supposed to be teaching. And that's how that concept works. So I'm going to begin with what is economics? You've heard of economics. And if you were a good student, you probably know what economics is. But economics is a social science concerned with the production, distribution, and consumption of goods and services. It studies how individuals, businesses, governments, and nations make choices about how to allocate resources. And economics focuses on the actions of human beings based on assumptions that humans act with rational behavior, seeking the most optimal level of benefit of utility. Now, the building blocks of economics are the studies of labor and trade. And since there are many possible applications for human labor and many different ways to acquire resources, it is the task of economics to determine which methods yield the best results. And economics can generally be broken down into macroeconomics, which concentrates on the behavior of the economy as a whole, and microeconomics, which focuses on individual people and businesses. You see, as I explain these things to you and as you process them as I'm reading them, What you're doing is you're being able to paint a picture in your mind or get a better understanding of what economics actually means. And that's all you need right there. That's all you need. Just imagine if you never heard the word economics, you would have a better understanding about what economics is and why it's necessary, right? So the next thing I want to talk about is an entrepreneur. Now, what you're going to be focusing on by setting up your system the way I teach is you becoming an entrepreneur, an online entrepreneur, small business owner, right? Sole proprietor or LLC, either one of those. You can even be an S corp or a C corp, depending on how you want to set your system up. I don't recommend that in the beginning because of the lack of understanding that goes into those. But you may know a lot more than you think you know, or you might be willing to go that route initially, and go from there. It's all up to you because see, you're going to be the captain of the ship, so to speak. You're going to be the one making the decisions and going causing the business to move forward. Now, an entrepreneur is an individual who creates a new business, bearing most of the risk and enjoying most of the rewards. Now, the process of setting up a business is known as entrepreneurship. And the entrepreneur is commonly seen as an innovator, a source of new ideas, goods, services, and business or procedures. Entrepreneurs play a key role in any economy, using the skills and initiative necessary to anticipate needs and bring good new ideas to market. Entrepreneurship that proves to be successful in taking the risk of creating a startup is rewarded with profits, fame, and continued growth opportunities. An entrepreneurship that fails results in losses and less prevalence in the markets for those involved. Now, there's been many people who tried to start a business online, right? Or try to start a business, period. They may have lasted a month, 5 months, a year, 2 years, and then things didn't work out. This thing called life may have gotten in the way because sometimes when you're trying to start something and you're basing it on your understanding or your knowledge, if your self-esteem or your confidence in who you are and your abilities are not real strong or grounded, it's going to be kind of easy for you to make a mistake that costs you more than you can overcome. But that shouldn't be a deal breaker for you. That should be just something that happened, an experience you went through, right? Because a lot of people who are actually millionaires have gone bankrupt. So what mindset do you think people are in when they're going bankrupt? You think they're happy and joyful? No, they're in trouble. They're trying to figure it out. But if they actually get to the bankrupt part, they didn't figure it out. It didn't work. But that doesn't mean that they're not worthy. That doesn't mean that they didn't have a good idea. That just means that they didn't implement the things, or maybe the timing was wrong, or maybe the funding wasn't there. There's a variety of things that can go wrong. But that's the thing that a risk taker has to take into consideration. And don't personalize everything. Just because it didn't work don't mean that you're not a worthy individual or you shouldn't try it again. Because a lot of times it takes 2 or 3 times to get to where you want to go in life. You know how life works. Come on now. We're all adults, right? If you're not an adult, I understand. But if you're an adult, hey, you failed before. You know what I'm talking about, right? All right. The next topic is equity. What is equity? Equity is a good word. Equity, typically referred to as shareholders' equity or owners' equity for privately held companies, represents the amount of money that would be returned to a company's shareholders if all of the assets were liquidated and all the company's debt was paid off in the case of liquidation. In the case of acquisition, it is the value of company of a company's sales minus any liability owed by the company not transferred with the sale. In addition, the shareholder equity can represent the book value of a company. Equity can sometimes be offered as payment in kind. It also represents the pro rata ownership of a company's shares. And equity can be found on a company's balance sheet and is one of the most common pieces of data employed by analysts to assess the financial health of a company. That's equity. Now, as I'm reading these different definitions to you and explaining a little bit more to you about that, you're going to know some things already. And I hope you do, because some of these things are going to be kind of repetitive if you're actually in this arena or in this field already. But some are going to be totally new to you, and that's okay. You just have to open your mind to some of the information, and you can always play these back. That's why I'm creating a course. When you create the course, you can access it for the rest of your life, right? Whenever you want to hear it, or if you want to share it with someone else, you have that option. Because that's what I do a lot of times. As I was buying courses and learning different things, I would share those with other people who I knew that couldn't afford it. Maybe, family members or friends who had an interest in it, but maybe couldn't afford the price of the actual product, which is why I like to keep my products and services at a rate that people can afford. And you may want to do the same thing, but you have to increase it because things change. You have to go with the economy. Now, the next thing is an ex-dividend. You know what a dividend is, right? Let me tell you what an ex-dividend is. An ex-dividend describes a stock that is trading without the value of the next dividend payment. The ex-dividend date or ex-date is the day the stock starts trading without the value of its next dividend payment. Typically, the ex-dividend date for a stock is one business day before the record date, meaning that an investor who buys the stock on its ex-dividend date or later will not be eligible to receive the declared dividend. Rather, the dividend payment is made to whoever owned the stock the day before the ex-dividend date. That's simple enough, right? And it makes sense. After that, we have goodwill. What is goodwill? Goodwill is an intangible asset that is associated with the purchase of one company by another. Specifically, goodwill is the portion of the purchase price that is higher than the sum of the net fair value, of all the assets purchased in the acquisition and the liabilities assumed in the process. The value of a company's brand name, solid customer base, good customer relationships, good employee relationships, and proprietary technology represents some reasons why goodwill exists. Now, goodwill is something you want to carry with you throughout your journey as an entrepreneur, because who you are will cause people to gravitate to you. And if you're not the type of person who people can trust or get to know and get to like, then you're going to create a barrier or a disconnect from a lot of people, because people buy from those that they know, like, and trust, which is why while you're creating your content and you're sharing your information, just like I'm doing here, you want to do it as a friend. You want to do it as someone that you really want to learn from what you're sharing, right? You don't want to do it and just, care less whether people get it. You want people to be able to understand it. That's why you want to structure it in a way where people can follow it relatively easy, right? Because these things, this is not rocket science. This is just positioning yourself and structuring your mindset to be able to get in front of your camera, whether it's a webcam or whether it's your iPhone or whatever device you use, and read content that you've done research on, took notes on, and you're sharing with the audience that you're creating. In the beginning, your audience won't know you exist. But as you continue to create content, people will be able to comment, people will be able to access, people will be able to share, people will get to know who you are. And if you're not credible, people will identify that. And you want to brand yourself as someone who is credible. All right. Next, we have guarantor. What is a guarantor? A guarantor is a financial term describing an individual who promises to pay a borrower's debt in the event that the borrower defaults on their loan obligation. Now, guarantors pledge their own assets as collateral against the loans. On rare occasions, individuals act as their own guarantors by pledging their own assets against the loan. The term guarantor is often interchangeable with the term surety. Got it? All right. Next, we have hard skills. I like this part because this is going to resonate with you. What are hard skills? Hard skills are learned abilities acquired and enhanced through practice, repetition, and education. That's what we do. We practice, repeat, and we educate. Now, hard skills are important because they increase employee productivity and efficiency and subsequently improve employee satisfaction. However, hard skills alone don't translate into business success, as employees also need to employ other skills, such as soft skills that contribute to customer satisfaction. So your question may be, okay, I get it. What are soft skills? Glad you asked. Soft skills are character traits and interpersonal skills that characterize a person's relationship with other people. In the workplace, soft skills are considered to be a complement to hard skills, which refer to a person's knowledge and occupational skills. Sociologists may use the term soft skills to describe a person's emotional intelligence quotient, or EQ, as opposed to intelligence quotient, IQ. Soft skills have more to do with who people are rather than what they know. As such, they encompass the character traits that decide how well one interacts with others and usually are a definite part of an individual's personality. In a competitive labor market, employees who demonstrate they have a good combination of hard and soft skills often see a greater demand for their services. Cool, right? Now, I hope you're not really getting exhausted with this because we're not even halfway through the entire process yet as far as the 3 months that I teach my clients how to do. My system is set up on a 90-day process. And if you can't do 90 days, you can't do a year or 5 years or 10 years. So what you would do is you would do what a lot of people do. They start the process really enthusiastic, really excited. And after about, we'll say 20 or 30 days, they kind of get burnt out. And you know why they get burnt out? Most of all, is because they're doing something that's not in line with what they have a passion for or what they enjoy, which is why your mission is to come up with something that you enjoy, something that you already know about, something that you are willing to learn about, or something that you just have a passion for, something you love doing. And you can share that. Everything there's nothing you do that there's someone else that don't do that. There's over 7 billion people on the planet. Somebody does what you do, thinks with the way you think. Now, the next term I want to share with you is hedge. You've heard of hedge funds, right? This is a hedge. What is a hedge? A hedge is an investment that is made with the intention of reducing the risk of adverse price movements in an asset. Normally, a hedge consists of taking an offsetting or opposite position in a related security. That's a hedge. Now, what's a hedge fund? Hedge funds are alternative investments using pooled funds that employ different strategies to earn active returns or alpha for their investors. Hedge funds may be aggressively managed or make use of derivatives and leverage in both domestic and international markets with the goal of generating high returns, either in an absolute sense or over a specified market benchmark. It is important to note that hedge funds are generally only accessible to accredited investors as they require less SEC regulations than other funds. One aspect that has set the hedge fund industry apart is the fact that hedge funds face less regulations than mutual funds and other investment vehicles. So you might want to consider that, but you do not, let me repeat that, do not want to play with that unless you are a professional, because that is not the game you want to play. But you can work your way up to that. You know, that's not difficult, but it takes time, it takes effort, it takes commitment, it takes practice. All right, the next one is, what is inflation? Inflation is the decline of purchasing power of a given currency over time. A quantitative estimate of the rate at which the decline in purchasing power occurs can be reflected in the increase of an average price level of a basket of selected goods and services in an economy over some period of time. The rise in the general level of prices, often expressed as a percentage, means that a unit of currency effectively buys less than it did in prior periods. Now, inflation can be contrasted with deflation, which occurs when the purchasing power of money increases and prices decline. Isn't that cool? Isn't that interesting? That's very interesting. Did you know that? I bet you did. Now, the next term is a dual term. I'm going to use them both together, and you'll see why I'm using them both together. They're hyperinflation. What is hyperinflation? Hyperinflation is a term to describe rapid, excessive, and out of control general price increases in an economy. While inflation is a measure of the pace of rising prices for goods and services, hyperinflation is rapidly rising inflation, typically measuring more than 50% per month. And although hyperinflation is rare for developed economies, it has occurred many times throughout history in countries such as China, Germany, Russia, Hungary, and Argentina. And the final definition today is deflation. I just told you about inflation, hyperinflation, now deflation. What is deflation? Deflation is a general decline in prices for goods and services, typically associated with a contraction in the supply of money and credit in the economy. During deflation, the purchasing power of currency rises over time. How cool, right? Now that was very interesting. I really enjoyed sharing that with you. Now, I don't know whether or not you pay attention to what's going on, but if you are, you're probably realizing that things are more structured, more organized at this point, right? When you're setting up your system, as I did mine. Now, I've done these before, right? So I'm kind of more familiar with the process, and I can go at a more rapid pace, and I know when things are not right and when things are right, correct? So you'll be there too, but it takes a little bit more time and effort. So don't get discouraged and don't get frustrated, because that's going to happen. And when it does, just know I did it and you can do it, because it's really that simple. It's really that simple. You're going to not create a beautiful product in the beginning. That's how that happens. But through trial and error, remember, you're creating your own world. This world don't exist for you. This is going to be a world that's going to elevate you into the lifestyle that you want to live. This is going to be the decision that you've made that's going to put you in a position that will allow you to not have to go to work for people anymore if you stick to it and get better at it and bring people in as a team that works with you. And that doesn't mean always mean having someone in-house, right? Like I outsource a lot of things that I get done, like marketing. I outsource my marketing so that I can just create the content, focus on that, and then pay someone to market it. That's what they do. And then I reap the benefits, right? Because the profit's all mine. When I charge $20 for that first course, all that's my money when it comes in. If I sell 100 of those, how much is that money? How much is that? 20 times 100, right? And all I'm doing is constantly recreating others because I'm working on the second set of 10 videos I'm creating for an audience that will be buying my courses, right? That may be what you're watching right now. And if it is, thank you for investing in you because you are taking the step that a lot of people don't do. You actually put your money where your mouth is, right? You actually willing to go through this process so that you can understand it. And I say bravo to you because people watching you and they will see you do it and they will say, well, you know what? I'm going to do that too. Or you can just share these with other people once you get their understanding of how things work. And then, people will look at you like, hey, Larry really helped me out because I watched that course he bought. Now I'm doing the same thing. I got my own system set up. I love it, and it's that type of thing. It's that type of situation. If you're doing what you really love, it's not like going to work. You're not working. You're enjoying what you're doing and you're getting better and you're creating an income for yourself, right? So with that, I'm going to say my name is Larry James. My company is Speak with Larry, no spaces. And as always, share with someone else what I've shared with you.